Hi everyone and welcome to my weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I'll take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've got a couple of key factors really that we need to be looking out for. We've got the Brexit process that continues to have an impact on UK assets, especially sterling, and also the Italian budget, how that is going to impact on the euro. Aside from that, we're looking at some key data points that could affect the dollar. So first of all, starting out with Brexit, it continues to dominate the headlines, certainly the weekends. Every time that we see the markets reopening Monday morning, there's a significant drive through sterling as the markets react to the press reports over the weekend. Now, certainly at the moment, the arithmetic regarding how Theresa May is going to be able to get this Brexit deal through Parliament is significantly questionable, and sterling subsequently is under pressure through that. So how that develops this week is going to be a really key factor on sterling in the coming days. So sticking close to the news flow on that one is crucial. Also, we've got the budget for Italy. Italy resubmitting its budget on Tuesday, and how that is, whether that's comes through as more of a conciliatory budget, whether it comes closer to the to where the EU want it to be, or whether they sort of stay steadfastly in their position and they try and sort of argue their corner. I think the euro is certainly under pressure a little bit today in anticipation of that on Tuesday, and again, so how that develops on Tuesday into Wednesday could be a significant factor for the euro. There's a big breakdown on euro dollar that we've already seen in front of that, below 113, big figure, key level there, certainly if it moves there in the, and holds that break in the coming days. And throughout this week, we've got some key US data points. Certainly the big focus will be on inflation. Now, inflation is still, I continue to argue, the last piece in the jigsaw for the Fed. We've got strong economic activity through the United States, but you don't yet really have that inflation data coming through. Now, we had Chinese inflation disappointing last week. How is the US inflation numbers going to sort of develop this week? We've got the CPI and the PPI. We've had earnings growth in the States building last week in the payrolls report. Is that going to translate through to the CPI data? Is that going to start to filter through? Treasury yields, I think, is a key in this factor, and I don't really see how you're going to see a sustainable dollar strong move in the absence of Treasury yields sort of breaking significantly more higher. So it'll be interesting to see how Treasury yields move through this week. So on FX markets, as I said, dollar strong, but that's mainly due to, at the moment, due to the weakness of the euro, weakness of sterling, and we've seen dollar index breaking out above 97 early Monday morning, and yeah, that's sort of indicative of the fact that we've got euro dollar below 113, and we've got sterling, which is 100 pips lower on the day on cable. So really strong moves there on those markets, which have helped to drive that dollar index on a breakout. So really strong move on euro dollar below 113 figure. If it holds that break, you're looking at 111.10 as the next key low to come in as a sort of target area. But also, if it holds that break, you then start to think about using any sort of rebounds as a chance to sell. You look at 113 figure being the sort of sell zone where you start to see the sort of 113 to 114.30 being overhead supply area. In terms of cable, it looks like it's breaking towards the bottom of its medium-term range, 126.60 area, and I think that could be seen if continued in the next couple of days. We see Brexit really undermining the position of the sterling bulls. Looking at indices, it's been really choppy recently, and the recovery that we saw in equity markets has just lost its impetus in the last sort of couple of sessions. Certainly in Europe, we haven't seen any sort of real suggestion of gains. We've seen a lot of negative candles coming through on the DAX. We've seen FTSE, which is stuck in a bit of a mini range between 7,027 up to 7,200. Which way are these markets going to break? Well, I think the S&P 500 and Wall Street could give a bit of an indication as to that. They remain strong. Although there has been a bit of a breakdown of a trend line on the S&P and the Dow in the last session. If that continues lower, then we could start to see the DAX breaking down below 11,400, FTSE below 7,000. Those would certainly be the two levels that you'd be looking out for there. In terms of commodities, well, we've got the stronger dollar is dragging on gold, but also you're seeing inflation, or the lack of expectation of inflation being a drag factor on gold as well. So US inflation is going to be key for gold this week. If we start to see US inflation spiking higher, for example, well, you might well see that the gold price starts to find a little bit more of support again. It has been falling away. 1200 big figure is a key level to watch out for. If it starts to trade with an 11 handle, you're looking at moves towards 1180 potentially in the coming sessions. So watch out for that. Oil is another key factor. Bear market on oil was hit last week. We've seen talks between OPEC and others over the weekend, i.e. Russia, talks of production cuts. Apparently Saudi Arabia are going to be cutting by 500,000 barrels, and potentially OPEC by 1 million barrels. So is that big enough to start to stabilise this significant sell-off that we've had in oil, over 20% over the past few weeks? US production is still very high and growing, and you look at the rig count, which continues to gain traction in the States there. So yeah, I'm not sure, but I think OPEC meeting in December could be a key factor there. If they start to discuss further production cuts, then that could start to put a floor in on the oil price. But at the moment, it just needs something to stem the tide. Perhaps that announcement by Saudi at the weekend is what they need. So on data points, well, you got a raft of UK data which could affect sterling, but ultimately Brexit is key for sterling. So maybe the inflation data, maybe the retail sales, maybe the earnings growth data will be a factor for sterling, but ultimately it is Brexit politics which are the key driver there. US inflation data, crucial. Also retail sales, watch out for that, and on Thursday for the US. A little bit of Chinese data on retail sales and industrial production tends to cause a little bit of volatility around the risk appetite models, so watch out for them on Wednesday. But generally speaking, we're looking out for the UK data and the US data. So with that in mind, I wish you good luck in your trading, and I'll speak to you next week. Thank you.